Thanks everyone for joining our webinar today. Credit Score Money Management, Understanding Credit as a Newcomer to Canada. I'm Riley Cohen, the CEO of CanadaVisa. Starting a new life in Canada comes with many adjustments. Being prepared will help all of you along your journey to success in Canada. A critical aspect of this journey will be navigating the financial landscape, and today we'll be learning about credit. According to a World Bank study released in the summer of 2022, Canada led the world in credit card ownership, with 83% of Canadians owning a credit card. Statista estimates that credit card ownership will continue to be the highest in Canada until 2028. This underscores the importance credit plays in the lives of many Canadians. The same study demonstrates that some of Canada's leading sources of newcomers arrive from countries where credit card ownership is less prominent. China has a credit card ownership rate of 48%. India has a credit card ownership rate of 5%. And Nigeria has a credit card ownership rate of 2%. Throughout this session, we'll cover topics such as how credit cards work, what is a credit score and what is it used for, and whether credit cards are the right financial tool for you. We're lucky to have the opportunity to learn about credit from TD, Canada's leading bank for newcomers. TD offers products and specials dedicated to newcomers to help ensure your success here in Canada. We received your questions via email before the webinar, and we're going to answer as many of them as we can in the second half of this event. You're welcome to also type your questions into the chat box on your screen, so please feel free to do that during the webinar. Please note we are only able to answer general questions about banking in Canada during this webinar. For more specific questions about banking, we invite you to email td.isgicteam@td.com. And we're going to pin that email to the top of your chat box. So again, if you have any specific banking questions, please reach out to this email address after the webinar. Also note that the webinar is being recorded. So we'll send you an email with the recording of this webinar, as well as the presenter slides after we finish the event. TD has been kind enough to have Ashley Zarzecki participate in the webinar today. Ashley Zarzecki is currently a product owner within the Everyday Advice journey at TD. She has held various roles in risk, forecasting, and product with a strong background in analytics. In her current role, she advocates for the credit needs of new Canadians, ensuring access to credit is easy, transparent, and accessible. Ashley will present for roughly 20 minutes and then answer your questions in the second half of this event. So without further ado, Ashley.
Thanks, Riley. Do we have a view of the, can you hear me?
Yes.
Oh, awesome. Okay. So thank you for having me. I really appreciate the chance to talk to everyone about credit, because I think there's a lot of misinformation and a lot of unknowns about credit and how to use it. Do we have a view of the slides for the presentation? Oh, amazing. Okay. So just as a heads up, I'll be giving some information about credit, how to build it, how it works, what the different types of credit are, and how to use it, how it impacts you. Please hold your questions until the end of the presentation, because I could potentially answer them while we're going through the presentation. So using credit is an integral part of a financial plan, and it's not to be overlooked, because credit in Canada is really a step number one in getting established and having a financial presence in the country. So the definition of credit is a transaction between two parties in which one, the creditor, or in other words, the lender, supplies money, goods, services, or securities in return for a promised future payment by the other, the debtor or the borrower. You use credit to borrow money to purchase a home, car, pay for school, or day-to-day expenses. So I think the first credit product we should talk about is the credit card. So how does it work? We can briefly go through the credit card. So think of the credit card as a short-term loan. You use it as you would to borrow money and then pay it back. Most credit cards are on a monthly cycle. So you would take a credit card to a transaction at a store. At the end of the month, you would get a statement, and then you would pay off that statement. A credit card has a credit limit, and this is the maximum amount of money that you can spend on your card. Spending more than your limit can result in declined transactions or over-limit fees. Credit cards can earn you rewards. They can offer you exclusive discounts and protect you from unauthorized transactions made on the card. If you don't pay off your balance every month, you'll be charged interest on the money you've used. And interest rates can vary from card to card, so be sure to speak to your advisor or financial institution to find out which card works for you. Financial institutions provide you with a grace period after your billing cycle to pay off your balance, and the payment date is printed on your credit card statement. You can also use credit cards to receive a cash advance by going to an ATM. But be aware that taking out cash on your credit card accrues interest immediately. And so be aware that using a cash advance can be more costly. Finally, credit cards can earn you cash back, rewards, offer exclusive discounts, and protect you from unauthorized transactions. Most importantly, though, credit cards can help you build credit history in Canada. And I'll go into that later on in the presentation. But I think those are kind of the benefits of a credit card and how they work for you. So is a credit card actually right for you? Like, should you get one? There's many benefits to having a credit card. You might consider one if you live within your means, you have a regular income stream to pay off your credit card, you don't have a spending problem, and you can make and follow a budget. There are a couple of benefits to having a credit card. It can be safer than carrying cash. If you think of theft or loss, you're a little bit more protected with a credit card. You could earn rewards without changing your spending habits. It's easier to track your spending because there's a record of all of your transactions, and responsible credit card use is one of the easiest and fastest ways to build credit. Awesome. So how does interest work? So if you don't pay off your credit card balance in full by the due date, you will continue to pay interest on your expenses until you pay your balance back in full. Interest rates vary depending on the financial institution, the type of the transaction, the type of credit card, and the province that you live in. Credit card interest rates are typically between 19 to 30%. You have a minimum 21-day interest-free grace period for new purchases and fees, other than cash advance or balance transfer fees that appear for the first time on the account statement as new purchases. And this grace period is really to allow you to pay off last month's bill before the next bill starts. And so you do have some time to pay that off, but be aware that should you cross that grace period, you will have interest fees appear on a credit card. Okay, so this next slide here is maybe an example to really quantify how interest is calculated. So let's assume you borrowed $1,000 and your credit card has a 20% annual interest rate. So the first thing to think about is you actually pay interest daily. And so the daily amount you would pay is 20% divided by 365. And so every day you're paying 55 cents off of that $1,000 you accrued. And so because it's 30 days in a month in a billing cycle, you would pay $16.43 in interest on that original $1,000. Most credit cards have a minimum payment amount. And so if you borrowed $1,000, you would make minimum payments of $30 if you couldn't afford to pay everything off. Because of that, if you're making minimum payment only, you would actually end up paying $990 in interest to pay off the entire balance outstanding. So the total amount paid, if you borrowed $1,000, would actually be $1,990.60. And so if you make only minimum interest payments on your credit card, it would actually take you 10 years and 11 months to pay off your credit card. So I think the reason this example is included is just to show you that it can be very useful to have a credit card, but be aware that it can get quite expensive if you don't pay everything off in full. Awesome. So let's maybe talk about how to build your credit history as a newcomer in Canada. So you create your own credit rating through the way you manage your money. The more you know about what goes into good credit history, the easier it is to establish and maintain a good credit score. So here's some ways and you can maintain a good credit history. The first is to pay your bills on time. Pay more, but not less than the minimum payment amount on your credit card. Avoid applying for credit too often because when you make frequent requests, that can be interpreted as poor money management. Every time you make a request for a credit card, that gets reported to your credit score. And so lenders can see how often you apply for credit. You can establish a credit history through the responsible use of credit cards. And so this will yield a better credit rating than having no history at all. And finally, avoid using your credit cards to pay off other credit. Awesome. So how is your credit score calculated? So it really depends. It's on a person-by-person basis, and it depends on what inputs and what kind of credit you have. But your credit score is an assessment of your ability to fulfill the financial commitment of borrowing credit at a particular time based on your financial history. Your credit score is dynamic, and it changes based on your financial circumstances. Credit scores are based on how well or not you've managed to do the following. The first is your payment history. How long have you made payments? How regularly have you made payments? And how often do you pay off in full? The second is the amount of debt that you're carrying. The third is the length of your credit history. Fourth, we have credit utilization. So credit utilization here is if you have access to a large amount of money, are you using all of it? Are you using a little bit of it? The number of credit inquiries into your credit file. And so this is how often someone is checking on your credit. How often are you applying for credit? How often is someone checking about your credit quality? And public records. And so this would include if you have a history of bankruptcy, if you have any collections issues, and any other publicly disclosed problems you might have. Awesome. So what's the difference between a secured credit card and an unsecured credit card? In terms of the product, they are identical. You have a card and you're allowed to use it. The main difference is that a secured card is a credit card where the credit limit is secured by depositing money with the bank, and the credit limit is equal to the amount of cash deposited. So this means that if you have a $500 secured card, you have given $500 to your financial institution to hold as a guarantee on your credit card. An unsecured credit card does not require the cardholder to deposit money in an account with the bank. An unsecured credit card can help you build your Canadian credit, but so can a secured card. If you are a Canadian permanent resident, you may be eligible for a credit limit up to $15,000 at TD, even if you have no credit history. If you're an international student or a foreign worker, you're also eligible for an unsecured credit card at TD. Both credit cards can help you build your Canadian credit history and credit rating in a positive way. Awesome. So other than the annual interest rate you have on your credit card, there's also some other fees you should be aware of that you might have to pay depending upon your circumstances. So the first is an annual fee. On certain credit cards, you have a fee to pay every year in order to reap the rewards and benefits of that card that some cards offer. And so sometimes annual fees are used in maybe a premium credit card, or a credit card that has some extra perks to it that a basic card might not. And so you might feel that the annual fee is worth it to you. The second is a cash advance fee. And so this is what I was speaking about. When you withdraw cash from an ATM, you can use your credit card for that. But you will have to pay each time and immediately when you get a cash advance. The third here is an over limit fee. And so this is when the balance on your credit card is over the credit limit. You may have to pay an over the limit fee to your financial institution. And finally, we have the foreign exchange fee. And so this is typically a fee charged when you use your credit card to buy something in a foreign currency outside of Canada. So your financial institution may apply an exchange rate, but then they may also apply an exchange rate fee for this conversion charge. Awesome. So are credit cards a good idea? I think we've kind of talked about the benefits and the limitations, but now you've gone through a couple examples of different credit cards and how to maintain good credit history and how to work on your credit scores. Let's talk about whether getting a credit card is a good idea. So if you think you can handle the responsibility and use your credit card properly, then credit cards can be useful. So by having a credit card, it allows you to build your credit history, earn rewards and cash back. You can set up pre-authorized payments. And so this means that if you have a reoccurring charge, you can just set up a pre-authorized payment, which means that you don't have to worry about paying that bill. It just gets directly applied to your credit card. And finally, it enables payments where credit cards are the only form of accepted payment on of security. And so if you think of online transactions, most online transactions occur with a credit card. Awesome. So I think I've run through the presentation that we have. And so I guess I thank you for your attention. And I hope this has been useful to you. If you have any additional banking related questions, you can send an email to the td.isgic team at td.com.
Thanks, Ashley, for the presentation. And thank you for everyone for submitting questions in the chat box. For the next little while, Ashley will answer as many of your questions as possible. But again, feel free to ask more questions in the chat box, and we'll try to get to as many of them as possible. Great. So first, let's start with some of the questions that came in by email before the webinar. Michael asked a few good ones, but let's start with the first. How can one increase his credit score within 3 months of getting a credit card?
Yeah, so your credit score behavior is really impacted, or your credit score is really impacted by your behavior. And so any credit that you have will impact your credit score. So think of your cell phone bill. If you have a cell phone bill and you pay it off in time, that goes to your credit history. If you have a utilities bill, so a power bill, water bill, that also gets reported to your credit history. And so making sure that you pay those on time is probably the fastest way. The second thing you can do is get a credit card for a limit and then use that credit card responsibly. Beyond that is maintaining and building good credit, the things we spoke about here. That will increase your credit score as quickly as possible. Unfortunately, one of the things that feeds into your credit score is how long of a history you have. There's not really anything you can do about that other than building a good history. And so that takes time. So there's nothing you can really do to speed up that component.
Great, sounds good. And just to confirm, does rent count as one of those payments?
It depends if your landlord submits to a credit bureau agency. A lot of landlords don't. And so unfortunately, like in most circumstances, it doesn't count.
Right, thanks. Another question is, how can one check his credit score without it affecting affecting the number itself, or is it impossible every time?
No, it's completely possible. By law, a credit bureau agency has to give you the authority to check your own credit score. So on the Government of Canada, the Financial Consumer Agency has a great website that you can click through to get the official requests for how to check your credit score with both credit reporting agencies in Canada. There are two of them, TransUnion and Equifax. And so you can make a request at any time for free with those agencies, and they have to show you everything that's on your credit bureau. So I would advise either going to those two credit bureau agencies and clicking through, or going to the FCAC website that we can link to in the chat if you like, to learn how to make a request on that. And so checking and monitoring your credit bureau is actually a good opportunity to see what lenders see about you. If there's something that's wrong, you can dispute that with your credit reporting agency to improve your credit score.
Great, thanks. Jerry just asked, do we wait until we get a SIN number to apply for a credit card? And there's been a few more questions about what documents are required to apply for a credit card.
Yeah, it's a good question. So at TD, we do request that you have some kind of residency status in Canada, whether it's temporary or permanent, international students as well, that you have a work permit. And so generally that does come with the social insurance number. Obviously, tourists or visitors aren't really eligible for credit. And so you would apply with your documentation. You would come to visit a branch and you would apply for a credit card. I'm sorry, I think I missed the second part of your question, Riley.
Yeah, the follow-up is what documents are generally required when you
Perfect. So we ask you, So we ask you to come in with your work permit. We ask you to come in with your Government of Canada ID, and any additional documentation that you might have. And so you would bring that in with you to speak with an advisor, and that would really set you up for a conversation about what kind of credit card might be best for you.
Great. And is there a difference? I see a question here. between the documentation needed for secured or unsecured credit card, or when I walk into the branch, I would need the same documents regardless of what kind of credit card I'm opening?
Yeah, it's the same type of documentation you would bring. The decision between a secured and unsecured card is probably a conversation to have with the banking advisor. If you yourself might be more comfortable with a secured card, then you might express a preference for that with your advisor, or the advisor might say that you're really only eligible for a secured card. So it's really a conversation to be had with the advisor, but the documentation requirements are the same.
Great, thanks. Michael also asked, what percentage should one spend from the total amount of credit given? So is there an optimal number to stay in? Do I use all of it? Do I use none of it?
Yeah, it's a good question. So like if you have a credit limit, like it's access to credit for you. And so that kind of fluctuates depending upon your needs. If you have a larger purchase to make, absolutely, if that's what you need to use that credit for, use it for that larger purpose. But you generally want to maintain credit within a certain window to show that you're a stable credit user. So that's one of the things that a financial institution might monitor is how stable is your credit usage. And so because of that, I think the general rule of thumb or the general recommendation is to keep stable utilization at 30%. But you aren't penalized for going over 30, for example. There's no cost to that. It's really like you have credit and you should use it responsibly, but there's no reason to restrict yourself if that's something that you don't need. Also, if you find yourself needing your credit quite frequently, or you find yourself getting up to your credit limit very often, having to pay it off and then continuing to use it during the month, it might also be an opportunity to speak with your financial institution about getting a credit limit increase, so that you don't run into that limit very often.
Right. Thank you. Akindele asked, how does someone get a credit score? Is it just something that you're given when you open your first credit card?
So the first time that you have an inquiry for credit, a credit file will be created for you. And so generally, if that's you asking for a cell phone, the cell phone provider will create will send off an inquiry to a credit bureau report or agency, sorry. The credit agency will see that you are not on file and they'll create a file for you. And so based off of that, the credit reporting agency will start to collect information about you. And so it's really the first inquiry creates a credit file for you.
Great, thanks. Cassandra had a few interesting questions that she sent over by email. First things, can international students get a car loan or a credit card from TD Bank? And maybe are there specific products that are geared towards international students?
Yeah, so that's a fantastic question. We do have an international student banking package available. So the international student banking package does have perks for international students, and it includes an international student credit card that's unsecured. And so making an appointment at branch to find out exactly what you qualify for is fantastic, because then you can come into TD and potentially get some extra perks or extra rewards for being an international student. In terms of other products like car loans, and I think there was a question about real estate, it really depends about what your financial situation is. And so for a car loan, like I would probably speak with a financial advisor in the branch or potentially with the dealership that I wanted to get a vehicle with. I think there was a question specifically about real estate, and I think unfortunately, foreign ownership is actually prohibited in real estate for buying residential property in Canada. So you really need to be a permanent resident to own property in Canada now.
Does building a credit score help you though for when you're a permanent resident and you want to purchase?
Yeah. So the first thing is when you do want to purchase property in the future, a financial institution will check your credit history. They'll check how well do you pay off your bills, how stable is your credit situation. And so having a credit card and maintaining that, having the cell phone bill, maintaining that, having the utility bill, maintaining that, all of that together paints the picture that you are a responsible person that a financial institution should lend to. And so that's really step number one in building your character and demonstrating that you're a good person to lend to.
Great, thanks. Jitender asked about business credit cards and funding available from TD Bank. Do you guys have specific credit cards for businesses and are international students and temporary foreign workers able to apply for those credit cards?
Yeah, so I would say that step number one is probably speaking with a business advisor. Typically, if you have a business that you're starting, you're thinking about your credit needs, you would probably speak with a business advisor to talk about what that situation is. We do have business cards, and I think that the business bank itself manages access to credit for businesses that are started by newcomers. So I don't think there's any obstacles there. But I would say that typically for retail consumers, if you think of people's everyday credit needs, you would really go through the retail channel, which is through the branch, and applying as an international student or as a temporary worker in branch as a retail customer.
Great, thanks. Bickens asks, should I pay the full amount of the credit card on the due date or before the due date, and does that matter?
Yeah, so the due date is really like by when you need to pay off your credit card. There is a grace period between when you get the bill and the due date that you can pay in between. But the due date is really the date when you start accruing interest. And so paying it off and making sure that that payment is on the bill the day before or the day of is what helps you not accrue any interest on your credit card.
Great. Thanks. And there's no special points for paying it off earlier, right? It's just as long as it's paid off by the due date.
Okay.
Couple. Is credit history to read the same in the U.S. as it is in?
The same. You need a credit score card at TD. So we kind of take it as all newcomers are newcomers. So we don't need a foreign credit bureau. You can just apply as yourself for a credit card. In terms of other products, it might be handy, but again, those are so non-standard depending upon country to country. And so in that case, like it might be helpful to you, but I would really speak with your lender to talk about that. But in terms of credit cards itself, you don't need a credit score to apply for a credit card.
Great. And does TD have, if I do have any credit history built up from a foreign country, when you apply for a TD credit card, that's inaccessible to TD?
Right. And that's because each country kind of has its own reporting standards. And so we wouldn't require you to have that, and we wouldn't disadvantage anyone who doesn't.
Great. Sounds good. James asks an interesting question. Can you open a TD student account from any branch, irrespective of where you stay in Canada? So if I'm in, cool.
Yeah, so okay. the network is nice because any branch, you can visit any branch to talk about your banking needs. I think typically people pick a favorite and that becomes their favorite branch, but any branch you want to go to will serve your TD banking needs.
Great. Noah Maka asks an interesting question about joint accounts. If I pay my monthly bills from a joint account, does this improve the credit history of both members on the account?
So it really depends who is the card holder of the credit card, not the checking account. And so if the credit card is in your name, it's really only your credit history. Credit is typically only in one person's name. And so the credit card, it would really only benefit your credit history. Sometimes you can have an additional card holder. So for example, you might put a spouse as an additional card holder, but you're still the primary person on the account. And so it doesn't impact the spouse's credit history. So it's really only you.
Great. What resources or tools does TD Bank provide to help customers monitor and manage their credit card? Maybe we can go into more detail into that.
Oh yeah, that's fantastic. So I think one of the best things about online banking is the ability to see what's happening in your credit card in near real time. And so rather than waiting for a paper bill to come in the mail at the end of the month, so you can see what's happened on your statement, after a month's gone by. I think online banking is a fantastic tool to see what's happening, so you can monitor what's happening on your credit card and what your transactions have been, so you can see how much money you're spending. There's some fantastic tools around monitoring as well, so that you can kind of set your own internal limits on spending. Beyond that, I think some of our other channels are also accessible. So if you're less familiar with online banking, I think you can call in to the phone channel and see what your transactions are there, or even visiting a branch to talk through that with an advisor.
Great. Sort of on the note of monitoring, John asks a question about whether the money has to be paid by the person with a credit card manually by either transferring or wiring the money to TD Bank, or whether the money is deducted from his account automatically at the end of every month.
No, so you do have to make payments yourself because it's really you're the card holder. It's also about how much you're able to pay, right? And so we talked about interest. Sometimes you need to use that interest. Sometimes you can't pay off the full amount. And so I don't think a financial institution would take away your ability to do that. So they wouldn't deduct that money from you. It would really be your decision to pay off and your responsibility to pay off your credit bill. So you can certainly maybe speak with someone about setting up automatic deductions and having that kind of mechanism there. But nothing here is automatic because it's your responsibility to pay your credit.
Great. Are there any differences in the credit reporting between the provinces in Canada? So having a credit card in Quebec, is that different than having a credit card in Ontario?
There's differences in the credit card structure itself. So fees and disclosure requirements are slightly different from province to province. But in terms of what happens on your credit bureau, those are the same across the provinces.
Great, sounds good. How can an individual determine sort of an appropriate credit limit for themselves? How does someone go about that?
Yeah, I think it's a good way of kind of thinking about what your own credit limit should be, is thinking about what expenses you have in a month that you currently use your checking account for, or you use cash for. So think about what your expenses are. I think there's a couple calculators online where you can add up those expenses and then look at what your applicable limit would be. But I would actually speak with your financial institution and a banking advisor, because one of the things that the bank wants to do is make sure that you are responsible with your credit as well. And so they'll tell you what we're comfortable lending to you based off of what you've told us. And then that can probably help you establish the right credit limit for yourself.
Great, thanks. In case of financial hardship, in case something goes wrong, does the bank provide options for managing your credit, or coming up with a plan to sort of pay off the debt and the amount on the credit card?
Yeah, I think that one of the nicer things I think about dealing with a financial institution is that they have the ability to help you should you have any hardship. So I think we spoke about the minimum payments, for example. If you can't pay off the full balance, you are able to make minimum payments. It'll impact your credit score, of course, but sometimes people fall onto hardship and you're not, for example, being forced to declare bankruptcy. There is the ability to manage that. And so I think if you do find yourself in financial distress, calling into TD and speaking with a customer assistance agent would be probably step number one, to say, I've come into this situation. This is my credit situation. This is what I can rightfully afford to pay right now. I can't do anymore. Speaking with someone, I think, would really manage and counsel that debt. So I think that would be step number one, is proactively speaking with your financial institution. It's an easier conversation than running into distress and then having the financial institution call you.
Great, thanks. Here we have another question about sort of tips for newcomers, but specifically about maybe some common mistakes that newcomers make when they come to Canada and their credit usage. Maybe there's a few things you can flag that for people, big do nots maybe before you open your first credit card in Canada?
Yeah, so I would say the first thing is probably applying too aggressively and applying it too many places. You think of the opportunities in different retail locations where people are constantly saying, open up a credit card, open up a credit card. Getting declined for credit shows up on your credit history. And so if you've been declined elsewhere, a financial institution might say, they're declining you, maybe I shouldn't approve you either. So I think that monitoring how active you are in your applications would be a critical thing. I think the other thing is thinking about other things that contribute to your credit score. And so when I mentioned utility bills, power, water, your cell phone, those impact your credit score. And so making sure that you pay those off on time is quite helpful. I think we've gotten a couple feedback from newcomers that say, oh, I didn't know I had to pay off my credit every month. So they would get the bill in the mail or they would see it online, and they weren't aware of that. And so you can run into problems very quickly by not paying off your credit in time, just because you might not know. And so I would say that step number one is asking questions whenever it involves something that has to do with credit. So whether that's your utilities bill, asking the person to set up your utilities to help you. At the cell phone company, asking them to help you understand the cell phone bill. And then at the bank or your financial institution, asking them to please explain everything about making sure that you pay that back responsibly. So I would say those are probably the biggest mistakes that people make. Beyond that, I would say just being very careful about sharing your credit. Obviously, you're the card holder on that. You're responsible for that credit. Giving your credit card to someone else is not a good thing to do. So just being very careful about ensuring that you're setting yourself up for success.
Great. Another question about credit scores is how frequently is your credit score updated? So once a month?
So if you have an inquiry, so if you asked for credit, it gets sent to the credit bureau reporting agency almost instantly. And so they have awareness of that. So there's not really a lag between when something gets reported and when something doesn't. But if you think of your credit card bill, that happens once a month. And so if you don't pay your credit card bill, once a month, that would get sent to a credit bureau agency.
Great, thanks. Ash here asks a question about their GIC accounts. Does a credit card account get opened automatically with the GIC accounts? And if so, if not, how does one open a credit card account quickly after landing in Canada?
Yeah, so I would say that it's very important to financial institutions that nothing gets opened automatically for a customer. Customer really has to engage and say, I want this product. So that we can kind of maintain responsibility across the customer's wants and needs. And so nothing here is automatic. If you open an ISGIC account, completely separate product from a credit card, you would have to ask for a credit card to receive a credit card. In terms of opening a credit card, I would say that applying at a TD branch would be step number one. So taking your documentation that we spoke about, your study permit in this case, your Canadian ID, your passport, any other documentation that you might need. Bring that in with you at a branch and speak with a branch advisor to open up a credit card. Great.
Is credit history, I know we talked about whether or not rental payments show up in your credit score and credit report. Does the opposite occur when you're applying for a lease, let's say, with an apartment? Do they check your credit score?
Sometimes they might. It depends on the size of the landlord. It depends on the size of the leasing agency. Sometimes they might request that you do it yourself and then you print it out and you share it with them. And so I myself have been requested to share my credit history with the landlord. And so to that point, having a good credit history and the stability demonstrates to your landlord that they should rent to you.
Great. Here's a quick question we got about your recommendation. I think I know what the answer is going to be, but I'll ask you anyways. Do you think it's worth it to get a credit card while studying in Canada? Even if maybe you're not going to stay here permanently afterwards?
I think it depends upon like how long you're here for as well. But my recommendation would be that yes, it's quite helpful if you think of even your day-to-day transactions. When you go to pay for something at the store, most people pay with credit card because you always collect those rewards or you collect some cash back. There's more stability and security in a credit card. That would probably be my recommendation. But it also depends on you and your personal circumstances. If you think you're not going to be here for quite long, if you think that it'll be more trouble than it's worth or it's not worth it, you don't think you'll return to Canada, then maybe that's not the right situation for you. And so maybe getting some counseling from a banking advisor might be helpful to you to talk through your personal situation.
Great, thanks. Mujahid asked a good question here. Do you know what the annual fee is for a student credit card?
It depends which credit card you want. There's different types of credit cards. And so a basic cashback credit card, for example, doesn't have any fees associated with it at all. And so if that's what you choose, then it's a no fee credit card, no annual fee credit card. If you're interested in maybe one of the more premium cards that TD offers, like a premium Aeroplan, then there are annual fees associated with that. But if you choose to select one of the cards that have no annual fee, then there's nothing associated with that. There's a great tool at TD that helps you select your credit card based off of your needs and what kind of rewards you'd like, if you'd like an annual fee or a no fee credit card, if you want a low interest rate credit card. There's a fantastic tool at TD to help you pick the right credit card for you.
Great, thanks. Maybe if we get a link to that, we can send it in the follow-up to this email. What credit cards generally have the most kind of perks? Is it usually the more expensive the card, the more perks, or does it really matter on what you're looking for in terms of perks?
Yeah, it completely depends on what you're looking for. Because a perk for me might not be a perk for you. Sometimes I like points, sometimes I like cash back. It really depends on what you think is worth it to you. Also, how often you think you're going to use your credit card, if you think that's worth it. So again, on the tool that I was talking about selecting a credit card, you can really run through which credit card and what type of rewards would be right for you.
Sounds good. Thank you. Again, we have another question here about the recommended percentage of usage of a credit card. Maybe we can hit that one home again.
Yeah, so in terms of your credit limit and how much you should use of it, you have that credit limit as access to credit for you because the bank thinks and the financial institution thinks that you can manage that level of credit. So if you need it for a larger purchase, absolutely use that credit to the way that you need it. But I would say that typically you have these one-time charges that might be larger. Typically, you don't want to run into the maximum credit limit all of the time because that can be problematic for you. You might go over your limit. You might have over limit fees. And so typically, I would say people try to keep their utilization and the amount of credit that they use at 30%. If you find yourself running into that maximum, that 100% very often, I would speak with your financial institution about potentially increasing your credit limit because that will give you, I guess, more space for your credit and borrowing needs. But I would say that there's no reason to restrict yourself to 30 if sometimes you might need 50, 60, 70% of your utilization because it's there for you to use.
Right. Great. Thanks. Another good question here. Will the credit limit always increase if I get a good credit score?
So again, I think it's very important that the customer initiates any activities on their credit. And so the bank won't do anything automatically for you, or a financial institution won't do anything automatically. You need to accept and approve anything like that. And so either they can offer it to you and say, like, we've noticed that you've been very good about your credit history. Would you like a credit limit increase? And then you can say yes or no. You can go to your financial institution or your bank branch and say, I would like a credit limit increase, and then they would apply that to you. But nothing would be automatic here because it's really about the customer consenting to what they want. Because I think the last thing you want is a financial institution granting credit automatically when you didn't consent to that.
Right. Interesting question here. Can a combined household income positively impact the limit of your credit card?
So household income is used in the adjudication decision, for example. So if you think about creditworthiness, household income might be incorporated in creditworthiness, but there's a lot of questions about the adjudication that feeds into it beyond income as well. There's also like how many bills you have to pay off, what your expenses are. And so in terms of your adjudication and how much credit limit you get, I would speak with a bank advisor about that to kind of see what you can do to increase your credit limit if that's something that you want.
Great. And on credit limits, we just had a question pop in the chat here about what is the initial credit limit offered to international students generally?
Right. So with international students, we offer up to $1,500 at TD in unsecured credit limit. For a secured card, I would speak with a bank advisor for that limit. But our minimum credit limit is $500.
Great, thanks. Do you know specifically about the cashback rate? Do you know what the cashback rate is on the student credit card?
I think it depends on which cashback credit card you have. So I would recommend that you go to the TD credit card selection tool because there's different cashback cards offered with different rates. And a student is eligible, I think, for most of them. And so I would go through there and see kind of which one you prefer to see what the different rates are. But I can send through that link.
Great, thanks. Interesting question here. This person said they made their payments on time, but credit score keeps on dropping. What advice would you give this person?
That's a tough one because I don't know the individual circumstances of what's happening. My first kind of response would be to check with the financial institution that credit card is with. If that's the only credit on the credit history, I would speak with the financial advisor. I would also check if there's anything else on the reported on a trade line, like a cell phone bill or a power bill, to see maybe there's a mistake over there. But I would speak with the financial institution that issued that credit to find out what's going on with their credit history. I think that would be step number one, but it's tough to say because I don't know those individual circumstances. But I would say step number one is speaking with the financial institution. Step number two is actually you can speak with the credit bureau. They have an obligation to reply to any disputes that a customer has about their credit bureau. And so if you think that a financial institution is reporting something incorrectly, then you can speak with the bureau reporting agency.
Great, thanks. Here's another question about what are the popular Canadian brands maybe that TD collaborates with to offer reward points and such?
Oh, that's fantastic. So I think one of the credit card rewards that we have is an Aeroplan credit card, which I think is such a fantastic I think brand and a partnership that we have is with Aeroplan. So I would probably consider that one to be one of the best ones. Beyond that, I think from a credit card partnership, it's Aeroplan. So I would say that's probably the partnership that's the credit card partnership.
Great. And does TD offer both Visa and MasterCard? And if so, does it matter which one you pick? Sorry.
Oh, yeah. If so, it doesn't matter. No, so TD offers Visa credit cards. It doesn't matter whether it's a Visa or a MasterCard. Some vendors might only take one or the other. And so that's really up to you as a consumer to decide which one you want. So I know that some people really have one of each, for example, if that's their preference. But it doesn't make a difference whether it's a Visa or a MasterCard. I think the security is quite the same. There's also other options other than Visa and MasterCard as well. There's other third parties there.
Great, thanks. And maybe we'll just end on this question, which I think is pretty good. What is the best credit tip you can give to a new immigrant?
Best credit tip, I would say is probably being very careful with your credit at the very beginning. While you're establishing your credit score, there's not a lot of information there. And so any negatives or any derogatories to your credit bureau can cause quite a bit of fluctuation until the credit bureau kind of settles. And so being very careful about what's on your credit bureau at the beginning is I think the best advice I can offer, because missing one bill payment might have a significant impact on your credit score in the way that someone who has 10, 15 years of credit history, a missed payment doesn't matter as much to them. And so I think it's kind of the unfortunate case is that when you don't have a long credit history, having that thinness of a bureau really impacts what your credit perspective or your credit profile looks like.
Great. Well, thank you, Ashley, for this insightful sort of Q&A period. We really appreciate you answering our questions. And that concludes our Q&A session for today's event. So just a heads up to everyone, today's event is part of a series we're doing with TD Bank, focused on helping you prepare for your journey to financial success in Canada. I invite everyone to join our upcoming webinars, as well to learn more about the Canadian financial landscape. Tomorrow, you're going to receive a recorded version of the webinar. So even if you popped in late or you missed this webinar, you'll be able to watch it at a later date. And don't forget to reach out to TD with any specific questions you may have about credit or banking in Canada. I encourage you to ask them about opening a bank account before or after arriving in Canada. And again, the email to reach them is pinned to the top of this chat. It's td.isgicteam@td.com. And Ashley, any last words before we close this webinar?
Yeah, I would say that in terms of credit, no one will penalize you for asking a question. So reaching out to a financial institution to ask them specifically about what they can do for you and how they can help you build credit, I think is a fantastic chance to educate yourself more about your specific credit circumstances. I would always recommend reaching out to the TD branch advisor to speak about your credit and banking needs. We have some fantastic newcomer packages at TD that I think would be of great benefit to people really trying to get established within Canada. So reaching out to the nearest TD branch to you and asking some of these questions would be really helpful.
Great. Thank you so much, Ashley. Thank you, everyone, for joining. I appreciate your questions and your engagement. I look forward to seeing you guys all in our follow-up webinars, and have a great rest of the day. Thanks again.